The Bank of International Settlements, or BIS, published a wide-ranging survey consulting more than 60 monetary authorities in late 2020 about their engagement and intentions regarding issuing central bank digital cash, or CBDC. Digital cash acts like real cash, except it is not on paper form. Money in an individual's bank balance is converted to a digital code, which can then be stored on an online database, in digital files, or within a pocket card. The concept of e-money released from central banks started in the 1990s, such as Finland's Avant Stored Value Card, while retail CBDC was seen early in Ecuador from 2014. The latest report now indicates that 86% of global central banks are actively exploring and considering the pros and cons of CBDCs, which is up from 80% last year. While the majority remain unlikely to issue a digital currency in the foreseeable future, a sizable minority are moving ahead. Roughly 60% of central banks are experimenting with digital currencies, while 14% are moving forward with development and pilot programs. Emerging markets are driving CBDCs forward with more pace and purpose than their counterparts in advanced economies, citing financial inclusion and efficiency of payments as top motivating advantages. 7 out of 8 CBDC projects are in emerging markets, and one of these is in the Bahamas, the first country to launch a live general-purpose CBDC, known as the Sand Dollar. Sweden's digital euro called e-krona is in progress, while the US Federal Reserve is looking into digital dollar. Although BIS did not provide a country-by-country breakdown, China accounts for the majority of central banks, being home to over 18% of the world population. China has one of the most advanced CBDC projects and is already 1 year into pilot testing its digital currency electronic payment, or DCEP. Additionally, in August, the People's Bank of China also expanded its trial of a digital renminbi to its 3 largest urban regions, which together contain 400 million people. The superpower is fast becoming one of the most cashless societies, fueled by the rise of dominant platforms like Tencent's WeChat Pay and Alibaba's Alipay. This cash evolution, though, leaves behind tens of millions of people who lack the access to navigate China's internet-based economy, creating a digital divide. BIS General Manager Agustin Carstens notes that CBDCs can serve as the basis for well-functioning payments, but only when accompanied with good law enforcement. Carstens warns that CBDCs without attached identity would elevate money laundering concerns, undermine efforts to boost financial inclusion, and contribute to cross-border instability. With the rise of cryptocurrencies such as Bitcoin, which is not backed by banks or governments, international policy coordination on CBDCs is set to intensify over the coming years as operational complexities continue to present challenges. Marvi Delfin, UNTV News and Rescue. We serve the people, we give glory to God.